Hi, Tom Lydon with ETF Trends here in Hollywood, Florida at the Inside ETF conference. And I'm here with Sharon French, Head of Beta Solutions at OppenheimerFunds. Great to see you, Sharon.
You too, Tom.
Another great conference and kind of a celebration of the industry, isn't it?
Yeah, indeed.
It continues to evolve, and I know you folks have made huge commitments in a variety of ETF strategies, but let's talk specifically about ESG. It's near and dear to your heart, and you're committed to that.
Absolutely. We have a tremendous passion and conviction around the space. You know, environmental and social investing is not new. It's about 200 years old. The education and the sort of mainstreaming of this concept is pretty new. In the past, there's been sort of negative screening, which people felt like, and then some of the data supported, it took you out of main parts of the market that would potentially drive return.
Right.
So it's evolved where there's a lot of data. There's been a proliferation of data available that allows you to screen on those three dimensions every company that you potentially put into your portfolio, and then taking that one step further, impact investing is really targeting specific outcomes. So we're pretty focused on the middle piece of that, which is ESG integration within companies within a portfolio.
I was at the Women in ETFs breakfast yesterday morning, which again, it was fantastic. And the pressure, I don't want to say pressure, but the encouragement that the ETF industry is putting on corporations for gender diversification, the board and the governance level is really key and critical. This is moving pretty fast, isn't it?
It is, and so most of the flows, there's 8.7 trillion, roughly 20% of managed assets in the US have some element of ESG or sustainable investing attached to it, but it's mostly been driven by institutions. So as asset managers, we do want to try to influence some of these corporations that the institutions and asset owners are helping us to do the right thing and participate in society in the right way. But it hasn't really made its way to retail on a broad-based level. So we think once retail really adopts ESG, that 8.7 trillion will expand significantly.
So if you're for it, buy the ETF, which really shows you vote with your feet, right?
That's exactly right. But the one thing I do want to point out that a lot of people miss is ESG is a great risk control, right? So there's a lot of value destruction when companies have governance lapses, when environmental and climate issues impact them. So when you use data that's available today to screen and identify those issues out of the portfolio, it's a fabulous risk control. So it's about performance and indeed taking a longer term view on performance, but it's also about risk control.
And as you kind of touched on, ESG is not your grandfather's socially investing methodology.
Absolutely
it's evolved in a
dramatically.
Huge way, right?
It's not new, but it is significantly evolved in all the best ways. There's a tremendous amount of body of evidence that say that it does not detract from performance, and in many cases, especially in the emerging markets, it is accretive to performance.
So do you think, as we look forward to what you're doing at Oppenheimer, might we see more in this space? Because I know, most importantly, you work with advisors arm in arm to make sure that they're doing the right things for their clients, not only in portfolio construction, but now is from a value standpoint too.
Yeah, absolutely. So you certainly will see more ETFs. We have two now, ESGL and ESGF, which are pretty broad-based, revenue-weighted. But we are really doing a huge exercise within the firm to see, how many of our portfolios, and there are several, are very ESG aware, how to package them slightly different. Should we put them into an ETF? And delivering at the point of need of the client, which is, those millennials are driving a lot of the demand, as are women.
Yeah, absolutely. Well, it's great to see, and
too,
great
Tom.
seeing you, Sharon. Thanks.
Have a great conference.